2025 was a brutal year for crypto, so brutal it felt like a full bear market. For the first time ever, the 4-year cycle broke, which it's something it never happened before. 1 year after the halving closed it in red. In this video, I'll explain exactly what broke in 2025, what most people missed, and what that means for 2026, including something that the majority of people don't understand. For everyone new, I'm CryptoGit. I've been over 9 years in this industry. I've lost a lot, I've made a lot. Now I'm documenting my journey for everyone that wants to learn more and wants to learn the real side of crypto. So let's get it started. First of all, I want to go a little bit more in depth what broke in 2025 so people understand it. So first of all, we got a really hyped up year for the start because Trump got elected and most of the donations from Trump administration came from crypto. So he always became that he want to keep crypto as the main thing for US because he actually got the most donations too. So we started 2025 with a big hype. We started 2025 with also a big pump on memes because what Trump did at this time, he actually launched a meme coin and everyone at this time in January wanted to join crypto. Once actually Trump meme coin launched, I remember everyone that has nothing to do with crypto, never heard about the term crypto before, was messaging me about Trump meme coin. That was kind of a bad sign that we all neglected because you have to realize that when you get all the retail and all the people that has nothing to do with crypto to ask you about something, that's a sign that it's a red flag. That's a sign that something will break very soon. And it actually was true because what Trump did after he came in the administration, he started with tariffs. Tariffs were kind of something that shocked the market and shocked everything because it was brutal for stock market and for Bitcoin. When tariffs started, we all kind of underestimated the impact because honestly in 2025 and 2024 we kind of had an idea what Trump would do because even in the last term Trump talked always about tariffs, so we kind of knew that he would do that stuff. What we underestimated is that the impact that tariffs had were crazy because of bad economy that we had and because of the high rates that he put to countries. Like what he did with China was crazy, over 100%. Like personally, and a lot of people thought that it would be something like 10%, 15% just for negotiation deals and then they're gonna get fixed, but they didn't get fixed so easy. It took a long period of time and then the market got priced in, then understood that tariffs are mostly negotiation tactics, but at the beginning was a big fear and that what caused a big of sell-off at the beginning of this year when we went from 108 to almost the bottom in March, which was 77. So during all this time we actually had tariffs which are bad for the economy and we had also high rates and QT. That is like a double effect because when you had tariffs that you impact the businesses, that you impact the people, and you have high rates and you actually have QT is basically quantitative tightening for people that don't know. Quantitative tightening means that Fed is not expanding their balance sheet. They're letting their assets to just basically mature, so they're not increasing the balance sheet. Fed, when it increases balance sheet, is bullish for risk assets, and that's what they did in 2020 when they did QE. They increased the balance sheet and that's how Bitcoin benefited. Now they've just started, but let's get back to the 2025. So we started with a big hype, everyone joined, then we went down due to tariffs. Then we kind of had this period right now that Bitcoin started to rally because of the major news that we might see lower rates coming. Lower rates came somewhere in September, came later on, but market always is priced in into the future. So for example, what is happening today into the market, it might be priced in what would happen in the next 3 months. So markets are always like a forward looking vehicle. So another thing that caused a bit of crash in 2025 was the conflict between Israel, Iran and US. That kind of affected the market a bit. Not a lot because, for example, if you check when it started, it just made a dip for like a month or two and it was nothing because you have to realize something. Every war is inflationary because all countries need to print more money to fund the war. So the first impact when something or like a geopolitical crisis comes, it's always bad, and that's what happens all the time. But if you check the charts long term, that's positive because they turn the money printers war. They turn the money printers on. How do you think they're going to fund the war? By turning the money printers on, by printing more money. Look what Trump said a few weeks ago. He said that he wants to increase the military budget to 1.5 trillion. What that means? It's money printer, because how you going to fund those military equipments that you want to do, right? So that was kind of a short-term impact, and then it got resolved, and then we made a new all-time high to 123. Then what is something that caused a big impact later on the year is the government shutdown. Why actually it impacted a lot? It impacted a lot because when government was shut down, we didn't have data for inflation, CPI, and all this kind of stuff. And during that time, there was no spending on the economy from the government. So TGA is basically Treasury General Account. When Treasury General Account goes up, it means government is collecting money. When Treasury General Account goes down, it means they're spending on the economy. During that time, Treasury General Account actually went up because the government was shut down. They couldn't spend money into the system, right? So the liquidity kind of shrink, and that's what it started basically the crash of the one of the biggest crashes from the last year. And this was combined with government shutdown and October crash. For a lot of people that might not remember, but in October we had one of the biggest liquidation events ever in crypto. $19 billion was liquidated, which was crazy, and I'm quite sure the number is much higher, right? They tell you 19 billion, but do you really believe it's 19 billion? Like, some rumors are saying that it's over 100 billion. But this is a brutal thing, because this is even bigger than the FTX crash. Like, it's bigger than 2022 when FTX collapsed. It's crazy. So what happened in October is something that we've never seen happening since FTX times, and it was even bigger. So something broke at the time. A lot of people are saying there are market makers that are insolvent. A lot of people are saying Binance has problems, but we can't to control what happens with market makers. That's the whole idea. We're just speculators and all this kind of era. And we had multiple news during this time that kind of affected the market. We have the October crash, that it was a big liquidation event. We have basically JP Morgan threatening MicroStrategy to get delisted from the stock market index. That was kind of caused the crash. And then we had the government shutdown that the liquidity went low. So this is the start of 2025 and the end of it. So at this time, all this year, we had two things. We had liquidity going down, overall liquidity going down, and high rates and QT, which again, it means liquidity is going down. Because when you have high rates, people don't spend money into the economy. They don't buy stuff, right? Banks are struggling, businesses are struggling. They can't take loans, like they can't do something because we have high rates. And combined, we had also QT, which Fed wasn't expanding the balance sheet. So that's what happened in 2025. It was a brutal year, I totally agree. But you have to see what's next and what's coming, and not dwell in the past, because a lot of people, just because they have been through pain, because for example, you saw Bitcoin moving a bit, but most of altcoins are down. If you check, for example, Ethereum is down almost after 5 years. Imagine how brutal it is. Imagine holding the second biggest crypto and being 5 years down. I know it sounds bad, I know it's hard, but you have to realize that market doesn't care what you feel or what you have been through. So that's why you have to not allow your past and what you have been through to not see where things are heading, because a lot of people don't believe any of the stuff that I show to them right now or the data shows, because they have been through pain. Like 80% of people in actions are based on what they have been through. So for example, if 2025 was bullish year, right? If 2025 was a bullish year, and we had the same macro data that we have today for 2026, I'm 99% confident everyone would call super cycle, right? Same data for macro, but just because people have been through pain, data is still the same, right? They can't see the data, or they don't want to trust it because they have been through pain. They'd be like, I don't care, like, let's wait till it comes. And that's kind of the nature of the market, but you need to understand to control your emotions. So now, let's get back to 2026, where I see things heading and what's my opinion. So first of all, I'll need to tell you something. let's go back to what happened last time, because it's very important so you can understand where we are right now. So last time we had the bottom basically here in 2019, right? This was the bottom. So this is kind of the full cycle. The full cycle is from here to here. I haven't made it correctly, but yeah, it's 1 December. I'll have to put it here like, yeah. So here's the full of last cycle so you can understand why we kind of went up. So we had the bottom, we had the rally. Then what happened during this time in, let me go to the weekly time frame because it's much better and you can understand it much better. So this is weekly time frame. During whole this time, Fed was doing QT, which basically they weren't expanding the balance sheet. Then what happened in 2019 in August, Fed actually stopped QT. So they stopped quantitative tightening and they started stealth QE, which they were buying 60 billion of assets per month here, right? A lot of people call this, yeah, it's not QE, it's not QE, stealth QE and all this kind of stuff. A lot of people at this time were fighting, saying that it's not enough, etc., like they're doing today. Then what happened during this time, after it happened, because this is a bullish news, it'd be like, what happened? During this time, few months after, we saw the virus, we saw the pandemic, which was so bad because it crashed the economy like crazy. Stock market went down, crypto went down a lot. And then we had this kind of big crash on March when lockdowns were announced, where Bitcoin dipped like 63%. Then a lot of people at this time lost their mind and thought it was over, right? Because they saw all this pain that I've been through. But you have to realize that smart money and the proper investor is not focused on what is happening now. Keep this in mind. Smart money is focused always on what is the response and what's next. For example, when the war started last time, I told to people, don't panic because the war started. See what would be the government reactions to this. And this is, for example, a clear chart so you can understand like stock market performance after geopolitical crisis. You see, 1 day return is always bad. 1 year return, see, it's almost positive all the time. Check another thing. See, for example, it's like in geopolitical crisis. Every day takes like, it depends how big it is, but it always recovers. Sometimes it can also take 1 year if the attack is like crazy, right? But usually check the average. The average just less than 60 days, right? So the smart money always focuses on the response and what's next, not on what's happening. So retail here panicked and lost their mind. Smart money understood that, look, Fed would not allow the economy to default and to go like crazy, right? So what Fed did, they entered the game and they were doing proper QE, where here they were buying like I think over 100 billion assets per month, or even more than that. So it went from 60 to over 100 every single month, and that's what caused the big rally to Bitcoin. During this time, we actually had low rates too, like interest rates were almost near zero at this time, right? They were so low. So we pumped because Fed did the QE, it was balance sheet expansion, and we pumped because we have lower rates. So here's a chart of, this is basically total assets of the Federal Reserve or Fed balance sheet. It started in, as I said, September 2019, and then the biggest pump came here. Look at March, look how steady this was, right? Then the pandemic came, but look at the crazy rally we had. Then this was the top somewhere here, yeah, November. So look how crazy the balance sheet expansion is. So how the top was formed later on, right? Because of course we had a crazy rally for Bitcoin, but how the top was formed? The top was actually formed because something called tapering, and not much people know about this, but tapering is basically the pace of how quick Fed buys assets. So for example, as I always say, markets are always a forward-looking vehicle. You can't wait for a full confirmation to buy because sometimes you might be late. For example, if you bought here, yes, you could have bought much better here because we had the QE, but again, who could have seen a pandemic coming? So sometimes it's not that you can't predict everything, but you have to react when it comes. So for example, before, Fed was buying 100 billion of assets per month. Then in November, what they did, they sent it from 100 billion to 15 billion. They were still buying, but they lowered the how quick they were buying assets, and that's what market the top for crypto. Now, why they did that? Because a lot of people be like, how the top is formed, like why they have to do that, why don't they increase the balance sheet for a long time? It's simple. It's the chart that many people negligate. It's inflation, because when you turn the balance sheet expansion on, when you turn basically the money printer on, what you expect is you bring up inflation. Like, can you imagine how crazy it is? But only in 2020 they printed more than 20% of US dollars in circulation. Like, that's literally crazy, and that's what actually caused the big inflation to come. So here's something you gotta understand: inflation always comes later. It doesn't come, for example, balance sheet expansion came in 2020, but it came big after 1 year. So inflation went from January 2021 to the top, which was November of crypto, to 6.8. So it went from 1.2 to 6.8. Like, that's a big growth for multiple months, right? So we had from 1.2 to 6.8, and still it went up for 5 months in a row with heavy amounts, and still Fed entered a bit late the game. So they stopped this, and that's what marked the top for crypto. Then what happened is that in March 2022, the Fed, for the first time, they started increasing interest rates. But a lot of people, here's why I tell you that you have to always think about the future and what's the response. Because if you react only to major news like this, for example, if you sold here, you probably lost, like, look, Bitcoin, you lost like 40% on Bitcoin if you waited for a full confirmation that Fed will hike interest rates, and that's bearish. If you waited for a full confirmation, you lost 40% on Bitcoin. But on alts, you lost like 80%. That's why I said that markets are always a forward-looking vehicle. Before we continue, I want to quickly mention something valuable. I run a free Telegram channel where I post daily insights, in-depth market breakdowns, and things that I can cover freely on Instagram and my YouTube. It's 100% free, no hidden stuff, just pure knowledge and updates to keep you ahead of the curve. You can find the link below or pinned comment if you'd like to join. It's all free, and let's get back to the video. So basically, the last cycle started because of Fed balance sheet expansion and lower rates, and it ended because Fed did tapering, which they slowed down the pace of buying assets, and that's where things crashed for crypto, because at this time inflation went only up, and that's a bad sign. So now we'll go where we are right now in 2026, because this is very important. So for 2026, why this thing is much different? Because you have to understand something. For this year, I have a list here, which I'll basically show you exactly what we have. So two most important thing is we have low rates plus RMP. What Fed did in December 1 is they stopped QT, exactly like they did it here. So they did the same thing that they did it here, right? But they didn't call it QE, because of course they're smart. They're not gonna tell it's QE, because QE, everyone knows QE is money printer and we go up. But what Fed would do this time, and they're doing, is they wanna put a different term, so they confuse you and they'll be like, yeah, it's not QE. Like I've seen a lot of economists and financial people online arguing, this is not QE, this is that. Like, that's what they want. They want you confused, because if you know it's QE, the price is not going to be here. If it's, you know, it's QE, price is going to be 200K. So even here, people were arguing it's QE, it's not QE. Then guess what? When people realized it was balance sheet expansion or differently money printing, things were high. So even right now, people be like, it's not QE, it's RMP. Yeah, that's what they want. But when you realize Bitcoin is 200K, maybe in a year or in a few months, and you'll be like, yeah, it was money printer, because it's credit creation. So here's the thing. For this year, we have low rates and RMP. Low rates just started, like Fed just started to lower the rates in September 2025. Then in December, QT ended and they launched RMP. It's basically, they called it reverse management purchases, a different term. And now they're buying 40 billion of assets per month. Last cycle they started here with 60 billion. Today they're doing 40 billion. Of course, it's not actually the highest amount or the best, but you have to realize it is better than nothing. That's what many people don't get. They'd be like, yeah, but it's nothing compared to last time. Yes, but it's better than 2025 when we had high rates and QT. Today we have the opposite. So why 2026 is different and how I see it playing out. So 2026, we have Powell leaving. Like, one of the reasons why the market actually took so long to go up is because Fed and Jerome Powell was afraid because of the Trump tariffs. So when Trump did tariffs in 2025, they thought tariffs would bring inflation. That's why Fed waited, but they really brought no inflation, because that's what the data shows. Like, inflation is just going lower. So that's what Powell did, and he messed up with the markets because he kept them down for a long period of time. So Powell leaves somewhere in May. The next candidate, Trump, has been clear that he wants a candidate that he will immediately lower the rates, and that's amazing for risk assets, because again, we get back to the same environment that we were in 2020 when we had lower rates and QE. Another thing that a lot of people are not paying attention is big beautiful bill. One thing that the basically Treasury of Secretary Scott Bessent is saying is that he wants to improve the Main Street. So one thing that many people don't get is that consumer sentiment is at the lowest point ever. Like, if you check the data, this is the consumer sentiment chart, and this truly shows how bad the economy is doing, because check it, it's lower than 2009 recession. Like, retail is crashed, like the average everyday person is crashed. Like, we have the sentiment of one of the lowest point ever. So the big beautiful bill that Scott Bessent is saying, what he wants to do is that he wants to basically improve the Main Street. So we have the Wall Street, which are institutions, and the Main Street, which are like everyday people. How he's doing that? He's doing that via actually having no taxes on tips, stimulus checks up to 2,000. They're saying they're gonna do that, and big tax refunds. So this is amazing because it gives free liquidity to people. Like, if you don't tax tips, it's a big market. If you give tax refunds to people, it gives more money for them to spend. And if you give also stimulus checks, it gives them more money to spend. And how they're gonna spend it? To the money, to the businesses. What they're gonna do? They're gonna buy stocks. They're gonna buy stuff that they want. Remember what happened in 2020 when government shared the stimulus checks of 1.2k? They all spent it in stocks, or they bought the things they need. But buying things that they need, it's amazing for the economy, because it means that businesses are improving. Something that many people don't understand is this chart that I'm going to show here. 1 second. Is basically the business cycle, United States ISM, manufacturing PMI. So here's the thing that you need to understand, and a lot of people underestimate this chart. This is differently called business cycle. When this thing is above 50, it means that businesses are expanding, they're producing. When it comes under 50, it means they're contracting, they're not producing. So during last bull run, for example, you see, let me go a little bit more, you see that business PMI, or the manufacturing, was going like crazy. Check, for example, January, February, it was above 50 all the time, right? That's where the economy shows that the economy is doing great, because businesses are having more money. When they have more money, they have more employees, people spend more. Like, it's a great economy. But look where we are today. For the first time ever, business PMI has been lower than 50 for 38 months, 39 months in a row. This literally, if you go in the past and if you check all the data, because I haven't all the data, this never happened in 100 years of history. For business cycle to stay lower than 50 for 39 months in a row never happened in 100 years. So everyone telling you that, yeah, I could have predicted all this collapse, is just bullshit. This is a data that shows that it never happened in 100 years. Who could have seen that coming? Who could have seen that businesses could stay in a contraction zone for 38 months in a row? Never happened before. Like, it always was a few months. It happened 38 months, guys. That's how bad the economy is. So I tell you this because I need you to understand the economy, then crypto, because crypto can't do great without the economy. So I want you to understand what broke and how things will change. But with big beautiful bill, things will change. And look, for example, if you go to the United States PMI and click the forecast, you can see basically the forecast they're having for PMI. And you can check, for example, by end of this year, by Q3, Q4, they're predicting a 54 points PMI, which is basically amazing because we have always seen the bull run and kind of out season starting when PMI was above 55, 56. We have always seen that coming at the time. For example, let me go to 2021. For example, in February, look, when we kind of started the rally on altcoins, we were in January 2021 when we saw like Solana popping off, because Solana did, I think, from January 2021 till the end of the year like 100x. But it started when business PMI was 58.7. So we are slowly getting there. Now, this is a forecast. It might change, but we're just taking the data on what they're showing us. And this is going to change because what I'm telling you right now, low rates, big beautiful bill, and something that many people are underestimating is Senate elections. This is so huge because you have to realize something. Like, Trump administrations wants to do everything to not lose the Senate elections, because if they lose, it's gonna be bad. Like, it's no government, no administration wants to lose elections. And Trump said it quite clear a few weeks ago. I don't know if you have seen, but he said, if we lose the Senate elections, I'll probably get impeached. So what does that mean? That means that he'll try to do everything to satisfy the economy, the Wall Street and the Main Street. Because if you're going to piss off and send the economy to a recession, you're going to piss off the Main Street is crashed. Who cares, right? The everyday people. But you're going to piss off the institutions too. And they're the most riskiest people to piss off because they control everything, right? Like, if you piss off institutions with trillion in management, you're having big problems, right? Because that's what you don't want to happen. So another thing that you got to understand is we have the AI boom, something that we didn't previously had last cycle. Like, last cycle, we had no AI. But today, there's the data showing that actually in Q3 2025, even David Sachs, which is like the representative in the Trump administration for crypto and AI, said that 50% of US GDP growth came from AI in Q3. And that he really shows that AI is not a sector to ignore anymore. And why this is bullish for crypto? Because you have to realize that if there's a sector that they care so much that they can't actually allow the economy to go down, is AI. Because if AI has a problem or if AI needs funding, what they're gonna do? They're gonna turn the money printer. Same like wars, that they actually print money to fund the wars, right? Same like they did with virus, that they printed money because the economy was doing bad. Like, they can't afford to miss this game because it's the majority of the growth in the US. And even, for example, let's get back to this so you can get my thesis why I think this cycle played only mostly for Bitcoin and stocks. So the reality is that on S&P 500, the majority of stocks that perform, there's a data that shows that more than 50% of growth from S&P 500 came from AI stocks. Like, the majority of this growth is not for all the companies. It's for Nvidia and the AI companies. And right now, this thing is just changing. Because, for example, Russell 2000, which is like the low caps of stock market, is like altcoins for stock market, is just starting to wake up. It's just starting to improve. And that's a good sign that shows that the economy is doing great. Because, for example, for the whole 2024, it went down only. Like 2024, see how it went. While stock market for 2025, it still did great. Look at 2024, it still did amazing. So it was mostly influenced by AI. And my thesis is that this cycle, we have seen mostly AI companies actually pushing the stock market to go up, and Bitcoin because of the institutional demand. Like, that's what actually happened. Institutional demand via ETFs actually brought a lot of adoption. Like, Bitcoin BlackRock ETF was the most successful ever ETF, right? So all this thing brought the Bitcoin price up. Now, something you gotta understand right now is where things are headed, because I made all this summary so you can understand what's going on behind the scenes, but where things are headed and where I see things going. Here's the thing. everything that we do in the market is tied to what politicians wants to do, and this is something that I've been saying for a long period of time. So here's what you need to understand. We have always been clear and had an overview what Trump would do in 2025. My mistake, and a lot of people's mistake for 2025, was that we underestimated the tariffs, right? We thought it would be something like 10%, 5% or 15% just for a negotiation deal, and it would get fixed. Guess what? It was much heavier and it had a bigger impact. So for 2026, we have the Trump administration telling all of us that they will run the economy hot, right? So they do low rates, Fed power living, and everything that I have it here. Now, you gotta realize something. Now I'm gonna play the other scenarios so you can understand what's going on. So what's the bear case, right? Because a lot of people be to me, what if this is not true? What if this doesn't come, right? So let me explain to you my opinion about it. So what if all of this is fake and we enter a bear market, right? Let's play that game. Because again, it can happen. Like, it's markets. No one can assure you anything. So first of all, you have to realize something. Why we need to enter in bear market? Think about it properly. You have to realize one thing. Everyone benefits when this chart goes up. Like, if you check, for example, what is the size of the population that made their wealth when things are up compared to company breaking, you'll see that 99% make the money when the money printer is on. Like, the real money is made here, guys, is made when the money printer is on, right? So everyone, every institution, every person wants things to go up. Banks want things to go up, money printer. Institutions want things to go up because that's how they benefit the most. And Trump administration and every administration wants the economy to do great because they can get more votes and they can stay more in charge. So you have to, when you start to realize that everyone benefits the most when the pie grows, you can understand where the economy is headed and where it was headed since a long period of time, because this is not a new thing. It happened in 2020 when they expanded the balance sheet. So don't get me wrong. I'm not saying that, yeah, if a company go bankrupt, you can't make money. Of course you can. But what is the size of the population that makes the most money? That's how you gotta think. Like, for example, how many billionaires got wealthy by destroying a company? And how many billionaires got wealthy by building a company? What's the biggest size? Of course, building. So everything in the world actually works in production. The ones that product, they make the money. You don't make wealth by destroying something. So here's the thing. What's the bear case? Now, how the market can go down? The market can go down, first of all, for the reason that it did last time. The last time the market went down because we had inflation going up. So that's the real first risk. And let me go and show the truth about it. So here's the thing. Let me go to the chart. This is inflation rate. So in January 2021, we went from 1.4 to actually 6.8. So we had like a few months in a row growth in inflation. So if we see this kind of move again, that we go from a small number to a big number for 5-6 months in a row, yes, I would say we need to be cautious because it's a red flag, right? But today, look where we are. Inflation is just staying sideways and it's one of the lowest point ever. And this data is lagging. Like, the data, if you go and Google true inflation, it's showing like 1.5%. So inflation is at the lowest point ever. We're basically here. We're basically, let me go to 10 years. We're basically somewhere here, guys. For example, we're basically somewhere here. So if we are somewhere here, how can top be formed? Like, how can a top be formed when inflation is not going high? Because the top can be formed and is bearish for the markets when Fed hikes interest rates, but there's not a reason like why they should do it. Like, it's a fear-based argument. You might be like, yeah, but what if they do it? I can't control what ifs. We can control what's probable, right? So what's probable is that they're going to lower the rates because they have the elections, they want the economy to do great, and they want the stock markets to pump, and they want to justify and to satisfy the Wall Street. So this kind of reason that, yeah, Fed will hike the rate, in my own opinion, makes no sense, right? Because it's not my opinion, it's what the data is showing. Don't get me wrong. When I say my opinion, just check the data. So second thing that you have to realize is that what is one thing, is a question, what is one thing, and I need you to think it properly, what is one thing that Trump administration benefits if they send the economy into the recession? Like, why they gotta do it, for example? Like, what Trump benefits by crushing the economy? I think is zero, literally nothing. Like what he would benefit. You might be like, yeah, but something can break. Again, anything can break. A war can start tomorrow or World War III and it will destroy everything. Don't get me wrong. But my point is that there's not a single thing that Trump administration benefits to send the economy in the recession. They just lose elections and they're just gonna lose the 2028 too. So there's not a single reason why I see a bear case playing out in this cycle and in this year. Now, don't get me wrong, here's my forecast on how I see things being headed. So what you gotta understand is that we might see also a one more short-term crash, probably, I don't know, to like Michael Saylor average buying price is like 74k. I wouldn't be surprised if we see another crash to probably 68, 69, 70 and then we go up only. That's a possibility, because here's the thing. 74k is the average buying Bitcoin price for Saylor. A lot of people, if it touches that level, they're gonna lose their mind and they're gonna be like, yeah, Saylor is gonna get liquidated and all this bullshit, while it will happen nothing, because Saylor has the maturity of debt till 2028. So till 2028 he's gonna be fine. But a lot of people that don't understand or they don't read anything, they're gonna panic. So here's the thing, that how I see things playing out right now. Listen to me carefully. I'm an investor, first of all. I'm not a trader. I don't care to be right what would happen in March or in 2-3 months. I care to be right to make the most money out of this cycle. So the thing that you need to understand, guys, is that you need to focus on making money rather than being right. Because here's what people don't get. Like, they'd be like, yeah, but you told this, you told that. Like, you have to make the money, not focus on being right. That's the thing that you gotta understand. So for example, if I tell March is bullish and it's bearish and I'm wrong, but I still have my coins, and let's say in November I make a 50x, I still make money. Who cares if I was wrong here? So that's the principle you need to understand. You need to be right in a full cycle. Don't try to be a genius by, yeah, I predicted this dip. And who cares if you predicted this dip and then later on you missed a coin that did 50x that you could change your life? You technically lost. You just won because you want to justify your ego. So here's the thing. I want to be right on the full cycle and make the most gains. That's my goal. So that's why I'm patient to wait. If things go up before Powell leaves and then we saw a crash, or if things go after Powell leaves and then we see up only, I'm not sure. And it's normal. Like, I'm not here to tell you, yeah, in March we're going to go up, then go down. Listen, there are mixed opinions that I actually have. For example, there's a lot of kind of uncertainty and fear during the period when Powell leaves, because it might be also Powell doesn't agree, or the other person doesn't immediately lower rates, and we have a little bit going back and forth with Trump. So there's a period of uncertainty. Either we go up from here to March and April, we see a crash during summer and then up only, or we can possibly go down a bit more right now, touch some levels, everyone lost their mind, and then we go up after Powell leaves, so like after March or April. Now, again, I'm always, you might be like, yeah, a lot do this, that they say, yeah, it can happen this, it can happen that. I totally agree, because I'm bored of this stuff too. But again, I'm an investor. I don't care if, as I said, I was wrong by predicting in Q1, Q2 when it came at the end. I tried to predict where the money printer is and where the direction is. And the direction is up because of what I told you here. So if you want to know the direction, it doesn't matter if you're trying to catch small stuff. So that's my opinion about the market, and there's a big chance that we can actually run longer than a lot of people expect. Because again, let's get back to the bear case that people have. Let's go to the Fed balance sheet expansion. It's just started right now, guys. Like, you're technically saying that we'll enter a bear market and things will go down when balance sheet expansion started. Like, the bear market never started when this thing went up. Never. Like, you're telling me that right now it's just starting and we're gonna enter a bear market. This never happened. Like, when Fed expanded its balance sheet, it was money printing that it helped Bitcoin to go up. So this never happened. So the top, I think it was 26 months. So the top of crypto market was 26 months after first Fed balance sheet expansion. Right now it just started last month. Like, if we get this same data, we can possibly run till 2027, middle of it. Like, that's all possible. And a lot of people might be bored and they'd be like, yeah, I can't wait. But that's markets, man. Like, I wish we could control it. I wish you could control it, but we are not the Fed. We're not the money printer. We're not the Trump administration. We're just speculators. So the top last time, so you can see the data, came when Fed actually started the balance sheet expansion 26 months. Like, the balance sheet expansion was running for 26 months. Today we just started last month. It's a data. Again, don't get me wrong. It's not what I want or what I say. It's the data. Then the Fed, basically the top came after interest rates were low for over 1 year. Interest rates just started to go low in September. Like, if interest rates were low for over 1 year and they were at 1%, yeah, I would be cautious, because I would say, yeah, it's a bad time. But they just started. Balance sheet expansion just started. Low rates has just started. We have the Senate. We have the liquidity going up. These are all positive signs for crypto. So that's why I'm bullish, and that's why I think we'll have a very bullish year in my own opinion for 2026 and also 2027. Again, it's a bit too far. I don't want to touch 2027 because we don't have the data, but I'm talking for what we have right now. So if we'll pump before March then crash, or if we'll pump after March and we crash right now, it's not a big deal. A big deal is for you to be positioned in the right stuff. And something you gotta realize is also, let me touch a bit the gold thing, because many people don't understand something. Gold and precious metals are always the first to react to the money printer. So for example, here's what happened. In 2019 in September, let me get back to basically when Fed did the balance sheet. They started the QE. They stopped QT somewhere here. Yeah, in September they started here. Gold at this time went only up till August 2020, right? But check Bitcoin at this time. Bitcoin at this time consolidated and went mostly down. For example, Fed from basically August, check here, August 2020, it went kind of sideways. So gold reacted to the money printer first. Like, precious metals are the first to react to the money printer. Then actually Bitcoin went down for a long period of time. Then when actually gold peaked here, it peaked in August and it went only sideways and down. Bitcoin did like a 6x in 6 months, which was crazy. It went from like 10k here to 60k in just 6 months. Now, a lot of people might see this and be like, yeah, gold is going up right now, but it doesn't mean that Bitcoin will stay down for more than 1 year. I mean, it can happen like last time, but you have to realize that, as I said, I don't think so, because he wants to run the economy hot. Like, there's not actually something that it would have much time for Trump administration to allow crypto to go sideways till, let's say, end of year, and then we go up only, or till 2027. I think it's gonna go maximum after summer because of the Trump wanting to run the economy hot. And all the things like lower rates, big beautiful bill, RMP, they take action not just immediately, not just as Trump started. They take action actually like 2-3 months later. So I don't know if there's gonna be something breaking like 2020 that caused the Fed to increase the balance sheet, right? It might also happen something that breaks by, I don't know, February, and then we touch 69 and then money printers stand back on and then we go up only. Again, it can happen. As I said, if I think the bottom is so near, the question is, we'll go up from here or we'll have another crash to 69, 68, and then it's up only. Again, you can't be right on short term all the time. All you need to be right is on the long term, and long term is bullish for all risk assets. And you have to realize something. If gold is up, if silver is up, if stocks are up, where do you think the next money will be rotated? Because if you're an institution and you see all asset classes like stocks, gold, silver up, you're not dumb to not buy Bitcoin when it's down. You're not dumb to actually see and go and buy stocks. Like, institutions are smart. They just want to make you feel dumb because they want you to be shaken out so you don't experience those gains. Like, you have to realize that the market is not for the weak. Like, honestly, 2025 was a brutal year, but it kind of makes sense if you see in the grand picture of things to go like that, because how you could go up when you got all the crowd? Like, there's never been in the history of crypto that you got the crowd, all the crowd joining in. And when I say the crowd, even the people that had no idea about crypto joining and making money. Like, how you can get people to join and make a 50x, 100x, everyone. That is, it never happened. Even here during the virus, like you didn't have the crowd here. The crowd joined here. So that's why I'm so bullish this time, because a lot of people have been tired. They think it's over. But again, what you do at this time when you feel like it's over will determine if you're gonna make the real wealth or if you're gonna just join with the crowd. So stay patient. I hope you enjoyed this video. Don't forget to like and subscribe. And I want you to give my opinion about what do you think about my thoughts. What do you think about the market? And yeah, any question, let me know.